I think the first is that the government continues to increase its focus on infrastructure spending. That should continue. B, the government, that means the public sector capex should increase, and that should prompt the private sectors also to start investing in a big way. The third, I'm expecting that the 15% corporate tax deduction, which was available only up to 31st of March, may be extended for a further period of 3 years, because a lot of companies are looking into expansion and now going into the greenfield project also. Fourth, I'm looking at again focus on the skilling, particularly on reskilling and upskilling. That is something which is vital for the country. And the fifth one again is the support for R&D. If you are looking at India's export growth story in last 5 to 6 years, we are growing at a compound annual growth rate of over 8%. And looking into the global trade growth and the global headwinds, this is definitely a very good achievement. And for doing that, I think both the sides, the government as well as entrepreneurs, have played a key role into that. Government is looking into providing an ecosystem for facilitating the exports, and exports are also now on a high trajectory, because there is a hard realization in the industry also that if they have to grow and if they have to go for the economy of scale, probably export is the only answer. So from that perspective, in fact, if you look into India's exports, in the last fiscal, we ended with a total export of $778 billion. But from here, we are taking a quite challenging task of taking it to $2 trillion by 2030. And that would require a compound annual growth rate of around 14%. So moving from 8% to 14% will require extra effort and probably more enabling and supportive ecosystem. So far as the budgets are concerned, we have looked into what could help the exports both in the short term and the long term. We always believe that for export to sustain, our focus has to be in R&D and innovation. Unfortunately, if you look at India's R&D spending, it is less than 1% of the GDP. And when I'm comparing with my competitors, they are spending between 3 to 5% of the GDP. Some of the countries like China or Thailand or Thailand, they spend around 3%, 3.5%. South Korea spend around 4.5%, Israel around 5%. Secondly, globally, R&D has been incentivized because it's a very high risk area with a lot of uncertainty and with long gestation period. That's why we have requested the finance minister also that in the budget, we have to look into incentivizing R&D. In fact, if you look into 35 of the 38 OECD countries, they are supporting R&D with tax deduction. And in that background, we have requested the finance minister to give us a tax rebate of 250 to 300% tax deduction. Secondly, the other major challenge faced by this export sector, and that is more so in view of the Red Sea crisis, is the logistics challenge. And one of the factors why we are facing the pinch is that we are not having an Indian shipping line of global repute. We have Shipping Corporation of India, but their share in total international trade is less than 10%. So we are requesting the government to provide the concession to the private sector so that we developed an Indian shipping line of global repute and we are not at the mercy of the foreign shipping line. Secondly, we are remitting around $110 billion as transport service charge, and most of that is a kind of freight on account of shipping charges. So if we develop an Indian shipping line which gets 25% of the business, we can save around $20 to $25 billion based on the current statistics. And when we move towards $1 trillion, probably that will be around $50 billion. So these are our requests from the long-term perspective. Currently, we are facing the challenge of liquidity, and we want the liquidity to flow at a competitive rate. So from that perspective, we have requested the government that the interest reclamation scheme may be extended for a period of 5 years, and the subvention rate, which is currently at 3%, it was brought down when the repo rate came down to 4.4%, needs to be increased to again 5% because the repo rate has moved to 6.5%. And we have also said that SMEs require a lot of marketing support. One unfortunate part of Indian SMEs is that they have the best of products and services, but their lack showcasing. So the government should chip in to provide a marketing support, and the present market support, which is through a corpus of around 200 crore, is grossly inadequate. And we have said that at least a minimum of 500 crores should be provided for marketing support for next 5 years. So these are in short some of our major budget recommendations.